There is a trading strategy that I use every single day. And trading can be so simple. It doesn't have to be as complicated as some people here on YouTube always make it out to be. The problem with many others who make YouTube tutorials or YouTube trading content is that they don't actually trade themselves. They just use it to impress you. They just use it simply for content. But today, I'm going to show you a simple strategy for the market open that you can use super easily. It's really crazy, simple, but super straightforward. And I think that's ultimately what it comes down to. That's what I want to do with this YouTube channel. Teach you that trading is easy, that trading isn't actually that hard, is the biggest issue in general. But when it comes to trading, it's really about emotions, because in the end, if you have your emotions under control, have reasonable risk management, and a good strategy, then anyone can master trading successfully without any problems. You don't need any special qualities for it, and you also don't have to spend all day staring at the charts. A lot of people misinterpret that as well. Wrongly. You can also be a successful trader and only spend 1 to 2 hours a day at the computer. This is the strategy with which I personally generate up to 50% profit per month. The important thing you simply have to understand here is, you see this curve. There are also several days when it doesn't work so well. But the important thing is to look at it in the long term, because in the long run, over 100 trades, over 1000 trades, this strategy works. And that's generally what's important, because a trading strategy means consistency, and that in the long run you are profitable with the strategy. And that's definitely the case for us. The goal of today's video is very clear: to show you how the strategy works and to show you that you can be consistently profitable with it. And this strategy is based on the market open, meaning the first 2 hours after the stock market opens. That's the period in which we will be placing the trades. And the focus is clearly on proven entry and exit signals, no gut feeling trading. Instead, we rely solely on sound chart structure and confirmation. What we're discussing in today's video is essentially range trading. That means we define the range and trade exactly within that range. We trade within the range or when a breakout occurs. The problem with this example range is that it's simply much too large. That's why we focus only on the first candle after the market opens. Because in the Eurozone, in Asia, and in the USA, we still have the traditional stock exchanges where institutions or Wall Street are trading, mainly in the stock sector, but also in the crypto sector. And that's exactly what we take advantage of here. With the first candle at the market open, we pay close attention to the candle's high and to the candle's low, because the first candle brings an extreme amount of liquidity, and accordingly, the first candle can also provide us here new trading setups. For this strategy, we then need to look at the specific market openings. Here I've shown you the 3 most relevant ones: the Asian market open, the London session, and the New York session. These are the most relevant market openings that we can trade here. Personally, however, I prefer in this regard the New York session, because in the New York session I've simply experienced the most volatility so far. And that's where my trading strategy has worked best up to now. The New York session runs from Monday to Friday from 3:30 p.m. to 10 p.m. German time. Once we have that, we look closely at the first candle after the market opens. Here, it's also important to consider which time frame we're actually looking at. Anything above the 15-minute chart isn't necessary for us to look at. The range is simply too large there. So here, we've just taken, as an example, the 15-minute chart, the 5-minute chart, and the 1-minute chart. And here I've marked for you where we would have the range high and the range low. So far, I've had the best experience with the 15-minute chart, because that's where we simply have the most liquidity. And up to now, that's the chart that has paid off the most for me. That's why we're now going to look exactly at the first candle after the New York stock market opens. We'll mark exactly the highest point of the candle and the lowest point of the 15-minute candle. Once the market officially opens for trading and we have precisely marked the significant zones on the 15-minute chart, we then smoothly switch over to the 5-minute chart and patiently wait until a 5-minute candle definitively trades either above or below our established range. So the next 5-minute candle that breaks through our zones, either upwards or downwards, is the decisive one. Once that happens, we switch over to the 1-minute chart and look for an entry setup there. And there are several ways to do this. Now I'll show you 3 examples of an entry. In scenario number 1, we simply have a big candle here. Here we break out. In this area, you could find an entry. Down here, you could set the stop loss so that we can then speculate on higher prices. But then there's also the retest scenario. That's the safer option. Here, we are betting that we break out and then come back again with the 1-minute candles. Pick up the entry here. And this is exactly where we open the long position. And this is how we enter. You could set the stop loss below this candle. This is basically the best scenario you can go for. And in the third scenario, we would short the whole thing. In that case, we break out. Can't hold the zones, correct downwards, and test them again. And right here is where we would go short, because from here we would go even lower. This is the third scenario, which would be the short scenario. Of all three scenarios, I like this one the most, but now I'll show you how to trade each scenario. Here we have an example. This is the first candle after the market opens. This is the first 15-minute candle, and now we'll mark the highest point and the lowest point of this candle as well. Next, we switch to the 5-minute time frame and wait until a 5-minute candle breaks through our range to the upside, or breaks through the range to the downside. So, we've seen it now. A 5-minute candle has broken above our area, which means we now switch to the 1-minute chart. Here on the 1-minute chart, we also have a really nice breakout, and we are exactly in between. A really nice gap, and that also indicates an upward trend. In this example, we can now either find an entry after the breakout scenario, or we wait for a retest and only then find the entry. But in this example, we use the breakout entry, and with that, we open the long position when we reach the high of the 1-minute candle. And in this example, we set our stop loss below the second candle of the gap, just as I show here in the example, and we aim for a 2-to-1 risk-reward ratio. And in this example, we see that the scenario worked out perfectly. First, we checked the 15-minute time frame, then we moved down to the 5-minute time frame, looked for the breakout, and then we switched over to the 1-minute time frame and waited for the breakout there. And the scenario played out exactly like that. The great thing was that we also formed a small bullish gap there, and that's another extra confirmation that it's more likely to go up now. Now we have the second example here. Here, I have for you now. With the first 15-minute candle, I marked the range high and the range low. Now we switch over to the 5-minute chart, and again we wait for a 5-minute candle to either break through our range high to the upside or break through our range low to the downside. So now we've seen again a 5-minute candle breaks out above our 15-minute range and also closes above it. That's our confirmation that we're now looking for a long entry. Then let's quickly switch over to the 1-minute time frame and take a look at the whole thing there. And right at this point, we can also see that this is exactly where a lot of new people entered the market. That's also why the candle looks like this. So at this point, we're now waiting for a retest, and we set our stop loss right here, or at the last range low. And here again, we're working with a 1-to-2 risk-reward ratio. And as you can see here as well, we had a really nice retest, found our entry there, but also set a stop loss and a take profit for the whole thing. And here too, we hit our target beautifully. We hit our profit. The reason we took the retest entry here is simple. We didn't have a bullish gap here. If you have a bullish gap, a breakout entry is usually more worthwhile. But in this case, we didn't have a bullish gap like in the first example. Instead, we just saw large buys at this point. We saw a lot of liquidity there. That's why the candles look like this. That's why the candles had those spikes. And accordingly, we chose the retest scenario here. So let's take a look at the third scenario. We're back on the chart now. Now, as the market opens, we mark the range high and the range low again, and then we switch over to the 5-minute chart. And we wait until we see a strong candle above our range or below our range. We even tested our range high, but with the 5-minute candle, we couldn't break through it sustainably. Accordingly, we then broke downwards, but here we saw a significant 5-minute candle below our range low. And that's why we now switch over to the 1-minute chart and start looking. After an entry and on the 1-minute chart, we now wait to see a retest right here at this range. And then we could place our entry. In this example, we have now seen the scenario didn't play out the way we had imagined, because right at that point, we simply saw a lot of buyers again and we moved back above our range. So, we've now seen another breakout here, and we've even moved above our lower high, which is a confirmation for the long entry. Because from now on, this zone is simply a key level that we will very likely test again. And that's exactly where we would place an entry and go long. And we can see the chart comes right back to our order block, tests this key level, and immediately moves back above it. That's exactly the moment when we enter here for a long entry. The stop loss goes at our range low, and we set our take profit here at our range high. And we can also see here, it's only at our range high that we see the trend reversal again. There we see a bit of sell pressure again, but in the end, the third scenario has also played out this way. The reversal entry also worked out pretty well. And with that, we come to the end of this video. I hope you've enjoyed it so far. A lot of work really went into this video, so please leave a like and a comment. And for everyone still looking for an indicator that suits you perfectly, that shows the New York session, or also shows the start of the Asian markets like here.